Your home could be a bank.
Yeah, this is basically what we're going to talk about today with financial planning. If you're planning to sell your home to buy a new one, your existing home could be the answer to how we buy the next one. So there's a lot of, when you go into selling to buy, there's a lot of financial planning that has to take in place. We have to look at all options when you're talking about financing this home, because nobody's giving you a home for free. Maybe you want a better home, if you want new, if you want to downgrade, whatever it is you're looking. We have to look at the home we have, look at the equity and other factors so we can really decide, is this the best financial sense for you? And you decide this, not me really, but you decide this, and we're just going to kind of give you some areas to consider.
Exactly. Therefore, part of that equation, really understanding the home equity, because that's going to help you to leverage for your next home if you're buying another home brand new or pre-owned. And home equity is really nothing than current market value of your home minus any debt that secured by it. For example, like a mortgage that you have, and by selling that home, basically you liquidate your equity and providing a fund for down payment of the new homes that you are purchasing.
So let's give you an example. Say your home is now worth $500,000. When you have let's go with the mortgage. That's amazing. Your mortgage is $150,000. That means you have $350,000 to use as possible equity to get into the next home. So we could be in this situation talking about getting into another home without any mortgage payments. Just something to food for thought.
Exactly. But the equation...
Before we get into that, let's do our introduction.
Yes,
let's hit it. Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Also, you can call text all the time, 252-327-3357. We love talking to you. Don't be shy. Also, grab our buyer's guide and seller's guide in the description below. Now tell me about those net proceeds.
But the equation is a little bit complicated that we said, because we just mentioned the home mortgage, but we are talking about net proceed calculation. Basically,
which we have a whole other video on to get more in detail about it. This is just general.
Exactly. Therefore, beside that, you subtracting from the market value of your home any mortgage or lien you have. Also, you wanted to know how much you wanted to walk away from toward your goal for the next home. And there are costs that we had in another video, like a commission of the real estate agent that they're helping you to sell your house, closing costs of the house, and also if you give seller any concession and the buyer, and also if you make any repairs to make yourself get ready before you putting in the market. These are all is going to be part of that equation.
Next thing to talk about is capital gains tax. If you sell for profit, and it depending on how long you live there, this can be much higher. If you live there a little while, it can be okay. But basically, the general rules at this time where single filers get to exclude up to $250,000 gain, married couples can exclude up to $500,000 gains. You might not be able to get that based on timing. So I would definitely say a financial advisor is definitely going to be able to, or you can Google it depending on, if you've lived in your home for more than 2 years, I wouldn't stress it too much. But if you have, then you just care about the big number. But if you've lived less than 2 years, this is a calculation you really do have to kind of consider. Because if you bought a home and you paid off all the mortgage or whatever, so you will have that $500,000 home, and you can now have $0 that you actually have to pay any mortgage. You have to look at capital gains. Are you going to have, if it's $500, you should be okay as a married couple. If it's $250, if you're single and it's only $250, there might be some taxes there you would have to pay for selling your home.
Exactly. That was the example?
Yes.
Because we did an example for the net proceed.
We did that in a whole other video.
Exactly.
So
now my wife wanted to talk about advanced finance moves like a bridge loan and HELOCs that you might have heard it, or you're using it to do the next transaction.
And again, we have a whole other video just explaining these. We're just talking generalities.
Exactly. Therefore, do you want to elaborate on that?
A bridge loan is basically when you can go to a bank and they're going to give you a mortgage and allow you to sell your current home later or as you're selling it, and that selling of the home is not tied to the buying of the new home. These are typically short term, and they're actually very hard to get depending on a lot on your debt to income ratio and how much money you have in general. These are not easy ones. The more common one is the next one, which is the HELOC.
Therefore,
or the HELOC.
HELOC or HELOan, as you said, is a home equity line of credit, which is known as HELOC, and basically offers a very flexible borrowing option where you can draw the funds as needed against the home equity that you have.
And we've had people take out home, intending to sell their home, take out a HELOC loan on their first home, buy the second home, and then with the intention of selling it, so they're going to have a month or two of mortgage payments, but that loan was really kind of their bridge. They gave themselves a bridge loan.
Exactly.
Now let's talk about contingencies.
Exactly. Therefore, we wanted to talk about basically contingencies.
Yeah.
What comes first?
Now, if you're in a market to where if the market's flying and everything's fast, nobody's going to talk about contingencies because they want a fast sale. Now, if your home it's not so fast, like it's currently in the market right now, might be okay. This means that you're selling your home. It's in the listing. It's in the sales contract of your home. Mm-hmm. It does bring your competitiveness down. So if it's like the hottest home on the market, this is going to mean that you have to commit to a specific time that you're going to buy your home, because you can't really own to it once in your financial situation if it's a mortgage. But allowing that giving yourself that 3 months or 4 months or whatever it is they're going to allow you to have to sell to buy is going to work out.
Exactly. The next important factors that you need always to consider is timing the market flux for optimum gain. Really understanding the market conditions, seasonal trend really can optimize to timing the selling of your home and purchase a new one. For example, in the seller's market, if you are selling your home is gonna mostly, if it's in a good condition and good location, sell quickly with a higher sticker price. And also you can use this one as a premium for purchasing a new home, and that could really work very well. No?
Well, it's just timing, right? So if you're planning on selling it at Christmas time, let's be honest, Christmas time is a little slower. It does pick up before and after, but Christmas week, people aren't really looking. So if you sell your home Christmas week, it's going to be a little harder to sell. Now, basically, you want to be able to understand transitioning has financial implications. There's a lot of variables. There's a lot of people that you need on your side. Basically, having a financial plan, having a real estate professional on your side to help you make these plans work out is going to help you effectively with the maximum profit of your home, because we want you to get the most money. And you also want to be able to get into that home with less stress as possible. Exactly. So we want to make sure that we are having a smooth transition and you have a solid financial footing on this. You want to add anything?
And definitely, I want to add that we love to connect with all the home buyers and home sellers. Mm-hmm. That's why we are doing every month actually market updates to stay on informing people to have that knowledge to make a good decision and have less stress in this transition. And please call us at 252-327-3357. Alan Victoria Pinder, real estate agent professionals in North Carolina, specifically Pitt County, North Carolina. And also watch all of our videos and series. We love to help you, and see you next time.